G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Be sure to check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So the topic for this video is going over Bitcoin and a couple indicators that look very, very interesting. Particularly this one I've got on my screen right now, as you can see, the SMI indicator. Before we go over the charts, I'll just discuss what it is and also talk about the RSI, which everyone knows about, the Relative Strength Index. It's quite common and used in trading and investing and whatever else. And then we'll probably touch up on the MACD as well. We'll show you the MACD and where we're tracking for that one as well. And we'll go from there. So first up, the SMI. It's the SMI ergodic, okay, is the same as the True Strength Index, so the TSI index, developed by William Blau. Except the SMI includes a signal line. The SMI uses double moving averages, a price minus previous price over 2 time frames. The signal line, which is the EMA of the SMI, okay, is plotted to help trigger trading signals. Adjusting guides are also given to fine-tune these signals. The user may change the input, close, method EMA, period lengths, and guide values. This indicator's definition is further expressed in the condensed code given calculation below. So you have the indicator on the bottom there. Okay. So my approximation, what I can gather from this level here, is you can see that the red line is a signal line, and then you get the white, okay, which is graphing out price. Okay, so we'll keep reading here. Adjust the top and bottom guides to control the quantity and quality of the trading signals. In addition to the guides, the SMI crosses the signal line. A change in trend is predicted. Okay, so it says here you sell when it crosses and a buy when this white level here crosses above the red level. Okay, so that just tells you roughly if you want to use it as a trading indicator. I'm not showing you that. I'm just showing you as a long term, it works really well as like an investing indicator because I don't trade. But that's just what it looks like there. And you can see that. And there, so it's pretty straightforward. All right, so that's the indicator. So this is it here. And we're on the monthly time frame. Just go over this and ignore this stuff, this lines and top sections. But what I wanted to really show you is probably better to see it on a different, I'll show it on a different chart so it goes back even further, especially this level here, so it goes back a lot further. And get rid of these lines for a sec. And if you go logarithmic, okay, there's your price. And we had this level and it crossed. So the blue crossed below the red, orange. Okay, so the signal line. I'll just show you. So yeah, so the orange is the signal line and the blue line is the SMI line. Okay, so we had blue cross below the red, the orange, and that is bearish. All right, so we'll mark that out. Happened here, as you can see, and you get these lines, ignore that. But it fell even further, okay, from this level. We corrected a bit more, but it did trade sideways, so it didn't go straight down, so that was the end of this rally. It did predict, there was a bit of a pullback, which it did happen, and price did go higher. And I've already drawn the line on the other, from a different strategy, but you can see this line here that's already there. It's pretty well when it crossed, okay? So we crossed back down and it marked a top and then prices crashed down as the signal line and the SMI line separated and continued down, and you see price goes down, all right? And then we traded sideways and then eventually we found a bottom and we ticked up with the SMI and signal line, as you can see there. See right here, okay. Right here we crossed, all right, and it trended up, and so did price, and went up and up and up and up and up and up and up. And we had this top in 2017, the bull market there. And what happened? Not long after this one, the next candle on the monthly, it crossed, okay? As you can see, it crossed. And what happened to price? It dropped fairly a lot. So after this candle close, we did fall 69%, big drop, okay? And as the signal line, SMA line, separated and continued down, okay? So quite straightforward. And then we crossed here right after this bottom. We crossed roughly here. If you want to get in a bit earlier, it did cross after this candle closed. All right, and we continued up. We did get a correction. The pandemic dropped right down to here, and we did have some. It did cross bearish here and then go down and stayed bearish, as you can see. All right, so this when it formed bearish, dropped here, the first drop, then it went back up. It continued bearish on the SMI indicator, and then eventually crossed right here. Nice and clear, or in between here, and we had this green big candle, and then after that separated, what happened? Price exploded. So we had a price surge into 2021, and then this big candle, we did cross below, and then price, did correct even more, and then we sort of found a base and went higher, but the SMI was going and signal line was going lower, so the divergence. And it kept going down as price was going higher, and the divergence continued, and eventually we sold off, okay? So it did mark a short-term top there and went lower, but as you can see, it never crossed back above the blue line to signal more bullish, and price did go collapse right down to the bear market lows of 2022, and we crossed here, okay, as you can see, bullish. Let's mark it out. And what happened? Price rallied up. Okay, as you can see, the SMI and signal line stayed above. SMI line stayed above the signal line, and we continued up. And what are we getting right now? You guessed it. We are getting a cross. So short-term bearishness here. As you see, separating. Need more separation to confirm this is a bearish trend back down, but we are getting a cross, as you can see there, which is not good on the monthly. And like I mentioned, it does, if you really want to, if it's a long-term thing, so, it went down here, then went back up, but it diverged. This never went higher than this high. See, it was lower. This high was lower than this high. This high was higher than this high. So we got divergence, and it continued down, never crossed above. So that marked the top there, and then the price collapsed down. Okay. And then we had a cross here, as I mentioned. Okay. And price explodes to the upside after this happened on the monthly, and we have a zigzaggy here action. So it is not perfect, okay? As you can see, price up and down, sideways, and big drop down, pandemic. But we did cross here bullish right there, okay? And it did come up higher and corrected. So there's some, it's not perfect, like no indicator is perfect. It did mark the top here as, this candle closed, and it did go lower, okay? As you can see the yellow, and then boom, we dropped a lot. And it marked a bullish move up here in 2015, and we go back to here, the red line remarked out, okay, which is marking yellow, and bam, it crashed. We had another sort of signal, but it did correct again, and I bet it would have crossed up here before this drop. So it can't go back that far, but as you can see, it is quite accurate, and we're getting this cross right now on the monthly. If you go to the weekly now, okay, and these lines look a bit different on the weekly. Okay, so that's all of them raised. So on the weekly time frame, if I grab a line and draw it here on this oscillator and go to the 60 level, right, and I'll just draw another one at the minus 30 level. There's something quite interesting that I actually found on this indicator. I'll just make sure it's professionally done. 0.3. Okay, that's better. And the top one is 0.6. Okay, which is already done, you can see. And yeah, I'll show you something interesting here. So go back to the start. Okay, so 2011 peak. Draw these in yellow so you can see them nice and clearly. We had a cross here above the 60 line. okay, we had a correction straight after it. Bam, sell off. Go back even further. It was a bit, our price is a bit funny here in 2009 and 2011. But as you can see, we did cross here, okay? It crossed here. And what happened to price? This happened. Price dropped 36%. Okay. This one here went above the 60 line, as you can see. And as soon as the blue crossed below the orange, I'll pull up the measuring tool. And what happened to price? It collapsed 39%. A pretty big drop. Very volatile back then, Bitcoin was. The blue line went above, but the orange line never went above, so I probably wouldn't count this one. But if you wanted to count it, we had the cross here, okay? And eventually, after this happened, we had a big wick down, 83% down. But look, this is very, very weird price action. So yeah, take it as you will. And was it too early to really see how constantly it was staying up this level? And as you can see, when you zoom out, you can see it's more up and down. It flows nice and neat as time goes on. Okay. So I'll just show you there that every time it's happened so far, we had drops. Okay. 39%, 83%, 36%. Okay. And this one here was a big drop. It was a big drop. Okay. So he did drop 86% after he's crossed. So very, very bad. And okay, now we have this bullish one. All right, we'll show the bullish ones as well, and we'll take a different color. We crossed around here. Okay, we went below the minus 30 level, and I'll make that. I'll go white. Okay, and what did the price do? It went up a lot. Okay, and you can see if you held up to this point, it was a 260% move. It's a very, very nice gain there. And look, I don't count these. Orange has to go above as well. So we'll just not count that one. Next one was quite clear. Okay. And so the orange was above. As soon as we crossed around here, price didn't do a lot. 2013 was the first peak. Okay. So I did see a bit of a drop down, 44% drop from the wick. So it dropped even further before it went higher. Okay. So it did drop 44% after this occurred. So it dropped and then went back up and then it went back down again. Okay, that's what happened. So not very nice there. Then eventually we did rally up. I'll make that yellow. So it's just so you can see that's the bearish ones and the white is the bullish ones. Okay, ignore the other lines. But it did get pretty close, this one here did. Okay, but a nice clear cross was here. Okay, as you can see, yellow was bearish, and both lines went above the 60 level. What happened to price? So from this level here, collapsed 63%. Okay, 63%, not nice, very, very bad. And then we'll get going a little more quicker. So the two lines did go below it there, minus 30, and we did cross about here. Okay, as you can see, and that was supposed to be a bullish one, white, but price did collapse, okay? So that didn't work out very nicely there for you. It went down 57%, so it was a failed signal there, but we didn't shoot up too much. And then we came back again for a second chance, and once it both crossed above each other, so you can see the blue crossed above the orange, and then we're below the minus 30 level. White was bullish, okay? And there was a bit of volatility here. So it did go down like 90% and 20 and 39% and 40%. If you held through this consolidation chop and waited for these two to cross over each other, as you can see happened here, you got a nice 1,000% return on your money, which is quite good. So it had a nice signal there. The bullish one and the bearish one occurred here. Okay. Right there. And price did drop about 28%. So bugger all, wasn't much, but it dropped nevertheless. Okay, so make that yellow. And then price went higher into the ultimate top, where this orange pretty much was the same. Okay, you mark that in yellow, another bearish signal, and both lines went above it, 60 level, and they collapsed. So after this signal triggered, and you waited for it to cross, both of them cross back below. As you can see here, it was a 77% drop. And the price did go below the 30 level again, minus 30. And they both ultimately crossed each other nice and clearly around here-ish. Okay, and I'll mark that in white so you can see it a bit nicer. And from this level, this bottom, I'll just quickly rush through this. And both lines, I mean, you can. I mean, this is depending on when you wanted to get out. Or if you held through this, then you had to wait for this drop, unfortunately. And you wait, and you big drop again, the pandemic drop. Nothing occurred here. Okay, so you're still holding on until you see these two lines cross above the 60 level, which occurred right up around here, roughly. Yep. So that is a nice 780% move from the bottom to all the way up here. If you got through this choppiness and sideways action and down, very volatile. I never crossed below the minus 30 level. And yeah, you got out here, which is good. Not far from the top. All right. And then went a bit higher. Okay, so it didn't collapse. So this level here was another level marked. And I'll mark it yellow for bearishness. And we didn't really go down much at all. We actually went higher. Okay, so that was a false signal. And then it stayed above though. It stayed above this 60. It never crossed below both of them. And you wait. And it occurred again. Okay, right here. And this one here was a bit more accurate. It didn't go much higher. Got it probably 43% higher before it collapsed 36%. Okay, so it did drop eventually. It took some time. And this level here, which is pretty well crossed when I drew I drew this line beforehand, but you get the idea. This high here was lower than this one. But the high on this chart price was higher than this one. And never really got above this line, but we did cross, and that just dropped really, really bad. That's divergence, if you're using it as divergence. Okay. And we crossed here. All right. And I'll make that in white for bullishness. We did see some drawdown from this level. 31% drawdown, which is not very nice, but if you can withstand that, current levels were sitting at 169, but if you got out when they're both lines cross around here, okay, roughly around there, you're up 200%. So very, very 3x on your money. Very, very good. This is Bitcoin, man. So wow. So and it did sort of choppiness, okay, before exiting this channel. So if you wanted to get in back here and definitively cross this red line, you know what I mean? If you want to wait until it gets out of this zone, you're better off because you're really more confident and you get a little bit better returns. Okay, so 230% there. And yeah, that's it there. And currently what we're seeing in price is, as I mentioned, it crossed up here and you marked it. You can mark it there if you want to. Yellow for bearishness. And we haven't really gone higher than this level. We sort of went up here a little bit, 9%, but we're currently 7% down from this. And from this wick down here, it's 25%. Okay, so we really need to keep pushing higher. This ain't definite. Like I mentioned, there are false signals. But nevertheless, if you look back over time, all right, so if you count them all up, 1, 2, 3, it worked out pretty well. 4 worked out extremely well. This one, 5, yes, it worked out well. 6, you can count that as a good one, 43% drop. 6 out of 6. This one here did very, very well. 63% drop, plus even more downside if you wanted to count this drop, okay, because it kept going lower or to here as it went below. So we have 1, 2, 3, 4, 5, 6, 7, okay. And this one here was a bad one. So I count that as a 7 out of 8. 7 and 1. 1 was false out of 8. This one here was good. 9. So 8 out of 9 were quite accurate. As you can see, the 1,000% move. And number 10 got 28% move, so very neutral. I wouldn't even count that. You can if you really want to. Right. That one there. And 11. So really it's 10 out of 11. And this big collapse here, 77%, 12. I'd say this is pretty good. So 11 out of 12. It's only one false signal so far. And yeah, like you had to really wait for this choppiness. And then 13, told you to sell. And that was a false signal. So 11 out of 13. Okay, we're at. Counting this one here, we crossed again. And we did ultimately drop. So that was a good one. So 14. And that was 13 out of 12 out of 14. 15. Oh, well, you can't really count that one. 12 out of 14. And crossed below it there. That was a bad one. Okay. Dropped. So 12 out of 15. And then 16. It was good. So 13 out of 16. And then here, it's been worked out pretty well so far. So 14 out of 17. Been pretty accurate. This strategy does work pretty well on its own. It's just indicator. And yeah, that's that one. Okay, so that is the weekly SMI. Okay. And I showed you the monthly on this indicator and how, some of these lines have done a pretty good job. Okay, as you can see there, crossed, bam, we sold off. Crossed here, we sold off. We went above the 60 line, we sold off. Okay. So these bearish signals have been pretty good. This one here was sort of neutral, wasn't that great. Missed out on a big rally up. So it's 50-50, it works, okay. And these bullish ones, you can see bullish one, the monthly, worked out really well. Bullish cross here, worked out pretty well. And the bullish cross here, as you can see, worked out pretty well, right? Some do, some don't. The monthly looks a bit different. But as you can see, wherever it crosses, if it's in the middle of the zone or on the outside, you can see right now we are getting across, okay? So not looking good for Bitcoin, and I'll be very cautious with this cross, as this could be like 2021 where, we came down and then we went back up again, and then went down and diverged at the price, or it could just collapse from now. So be very, very wary of this indicator and what it is telling you, okay? And we have the RSI at the moment. And I like to use the RSI on the more or less on the weekly time frame. And you look at the monthly, you can if you want to. Okay, it's up to you. And that's one of how I like some of these divergences. That's the only way I use the RSI is the divergence. And we'll go back to where we go back to. We'll go back as far as we can. Okay. This one's okay, I suppose. But it's really neutral, okay? So it wasn't quite good, but did see a divergence here. So you got 1, 2, 3, and after it occurred, okay, the third one, all right here, did get a drop of 46%. It's really early days. So this divergence played out and it did correct. But then we went higher, okay? And then we corrected, we crashed, all right, eventually. And then you have divergence again here, nice and wide. So there's these red lines here, very, very nice and clear. And I'll just get a drawing up of it. So this peak, 2013, to the very tippy top. As you can see, price went higher than this one, but the RSI went lower. See, that is slightly lower than this one. And then we collapsed. Okay, so we did drop a fair bit from that point. All right, from candle close to, it did drop 83%, of course. It did drop a lot. All right, so that's that. So this divergence was a very small drop, 46%. And it's not a very small drop, but in the crypto land, it is very small. So Bitcoin was a very small asset then. It was just getting launched, so give it a break. And 2013 was still a very small asset and dropped 83%. Okay, after this divergence played out on the RSI, and we did have a divergence here, as you can see. But I like to see this didn't cross above this line here. It's 80 level. You got 80 and you got the 20. I want to see it like this, nice and above it, okay, for it to be very, very valid. This to me is not valid. I want to see it like this and like this. So I wouldn't count this one, okay. And this one occurred, and this one was higher than this one, so no divergence just yet. And then we had divergence, this red line, as you can see here, all right. The divergence played out eventually, and as you can see here, you know, the lower high there, price didn't collapse, all right, didn't go down, but it still got to this peak, and we had a red line, and when the red line played out as best it could do, we had a big peak, and then obviously it dropped. Big 83% drop, just like this one, 83%. And the next divergence played out in 2019, we're in rate cuts, and then we had this peak, which was the last sort of rally before big drop, pandemic drop. And as you can see, the divergence played out pretty well. All right. Kind of did, but kind of didn't. You know, it's not really. This is not very good divergence, in my opinion, because price had a high here and a lower high here. This one went high and low. So this to me is not a good divergence. All right, this is not plausible. These two were being a little bit better. As you can see, price went higher, okay, and we diverged with these two, and it's nice and above this A level, little, you know, high here, and then we collapsed, okay. So that one would have been, these two would have been a little bit better, and then from that to that, we got a 39% drop, and pandemic drop was 64%. So it played out here, but didn't really play out here. That didn't really count, in my opinion. Then we had this next divergence play out. First one was this one, okay, so this high and the lower high. All right, was the first divergence, which is here, as you can see, lines up with that. And here, all right, was near the peak. And not long after that happened, we had a bit of, you know, choppiness and a big drop. 49%, so 50% drop from that level, from this divergence signal. And even from this high to this high, this went higher than this one, okay? So you can see it's slightly higher, the wick, and that one there. So if you draw a line from the top, you can go from here, because that's where the RSI was, or you can go a bit higher to where this level of the RSI was, this red line ends, and mark it up to here, where it's just lined up with that. What happened to price? Because that went lower, the RSI went lower from this one. We topped, and it crashed big time, 76%. So it played out pretty well these previous times. Okay, as you can see, the drops 83%, 64%, the RSI 50%, 76%, 83%, the 2013 peak, and yeah, this 2011 period, we had a 46% drop after this divergence played out. Eventually, if you wanted to count these two, just these two on their own, you could have done that as well. That's valid. They're both valid. And after that happened, we did get a 50% drop. Okay, it doesn't look very big, but you know, as you zoom out, it looks like, wow, how's that 50%? It's impossible. But yeah, look at the price. Like 0, 1 cent, 30 cents, and then 17 cents. So yeah, so it got to 35 to 17. So that's a half, all right? 50% off. So it played out pretty well in the past, as I've showed you. And there are other divergences. There's some here. There's one here. So that one and that one. Okay, there's divergence here that played out. And a little drop from this peak here, I should say, to here. Got a 30% correction. Nice little correction after this divergence played out. So there are other ones I didn't pick up on. Excuse that. But you get the idea, okay? I've just showed you these ones. And that there. You can just sort of see this is like divergence, but didn't go above the A level, because I like the A level to really show you that it's oversold. Or overbought, I should say. Oversold is the below the 20. I'm just showing you bearish examples for now. I'm not showing you any bullish ones. We run out of time. because what's happening right now is interesting. Here, we didn't get divergence because this high went higher than that one, and so did price. But as you can see, price has been trading a little bit sideways, okay? Like this level here, as you can see, is sideways, but the price of the RSI, the momentum, is going down. This is sideways, this is down. So you see this divergence, right? And from this point, candle close, wick down is 30% drop. Current levels, we're down 12%. It hasn't played out to its fullest potential. But this is this little divergence here that it showed. We said to see a drop. All right, so it has played out pretty well in the past. So yeah, that's the RSI and the SMI. And we'll just finish up on the MACD. Okay. So the MACD now, and I'll just stick to the weekly as well. All right. So they're the RSI ones. And we'll go along and have a quick look and see how this played out. And we'll just go through the overbought and oversold levels. So the 80 and 20, so it's 80 and 20, these two blue lines. Okay. So this one here, you can see that the MACD was pretty well, going down, right? Slightly down. And price is going up into this peak. As soon as we crossed, what happens to price on the MACD? It dropped 86%. That was the first one. Okay, the MACD. And we'll just do bearish examples because I'm bearish at the moment, and I just want to show you why this played out pretty well. So the MACD crossed above this A level, and then it went even higher, which is good. So the price goes higher, so does the MACD. What you want to see. Did see a correction there, nice correction. And then we had a high up here. You notice that this MACD was lower than this one. These two lines are lower than these two. So we had divergence there. Okay. Let's draw out the MACD, as you can see. It didn't do a very accurate job on the indicator itself, but you can see that high is lower than that one. And this high is obviously higher than that one. And we had divergence and we had a correction. All right. And all the way down there. So the same as that one, 83% drop. Okay, same thing. But you have to wait for this to cross. So it crossed about here. All right. So really, it didn't occur until about there. And bring this over to here. It's a pretty similar drop, 80%. Okay. So it did drop after this divergence played out. So this one here played out very well, 86% and 82% respectively after the cross of the 80 line. All right. So price. And we had it here. Okay. So another example of there's a high there and a high on price, but it went low on the MACD. All right. And after this occurred, it was a bit late, but you got it here and it did drop 28%. So bugger all, we thought went up. So it didn't really play out very well there. Get rid of this one. So it didn't really work there. It doesn't work all the time. Okay, there's always indicators. I'm just showing you that in real time. Another signal there. That was higher. So that was higher than that one. So that's fine. That was higher than that one. That was higher than that high. So it's price. So you keep chugging along. We had a bit of divergence here. Okay. Whoops. Grab this line here. And we did have divergence here. So a high and a lower high on the MACD. But, and then price did correct a little bit after this, but it already crashed after it crossed. So it was a failed reading here. So I'm not going to draw nothing there. It didn't work out too well there. But price went higher, okay, than these two. So there's no divergence on this one. So, and I'll just get rid of that. Get rid of that. Okay, as you can see. And get rid of this. And a high and lower high. That was the same with price, so nothing occurred. That's fine. That's fine. Okay. MACD. But here, this red line here, so from this high, okay, to this, obviously it's way lower than this one, and price is higher than this one. And what happened after this occurred? We had the cross here. Okay. So right down here, if you want to be fair. That was a 68% drop. All right. So pretty bad drop after this divergence. Now it's a very nice, that's what I want to see, nice wide divergence. And the actual indicator worked pretty well there. So picked up on it and we got a big crash. All right. Played out pretty well there. And currently we're seeing a big divergence. So this high and it says pink line. It says pink line is slightly, pretty well even there, okay? But the blue line, that one there, and that one's lower than that blue line, so that is divergence. That's lower than that one, technically, or flat. If you want to call it flat, you can do that if you want to. They're pretty much flat by price. It's gone higher, okay? I'll get rid of this. So this is big, wide divergence on the weekly. And yeah, and after this cross occurred right here, we've had price drop 25%. And currently we're at 7% down from that, okay? So they're the bearish ideas. And it works pretty well, as you can see. 28% drop, 82% drop, 86% drop. The false ones I'll show you was here. There was a false one. Nothing happened there. And that was it. It's one false one. All right. And this one's playing out right now in real time. Okay. So they're the three different indicators I wanted to show you for Bitcoin. The RSI, the SMI, and the MACD. So yeah, this is a bit of a long video. Apologies for that, but I wanted to cram all these in and show you in detail what the results were going back historically, back to the inception of Bitcoin in 2009 to now, showing you the SMI, which is a new indicator I discovered the other day, and did some back testing and looking at it, and it looks like a pretty promising indicator that I will definitely look into further and maybe incorporate in my strategy. But I already have a strategy and it's pretty solid, so I won't change it. But this one just gives you an indication of what's happening right now. And about a cross, okay, in the SMI, bearish cross. So this could end up in more down price action or could be a false signal. So we don't know yet. It has been very accurate. The RSI as well. Okay, the RSI, more or less divergences I use it for, is a bit different to the SMI, but the RSI's divergence is very strong and very accurate, as I showed you. And the MACD is the same thing as divergence. So those two divergence signals. And then the other one, which is the SMI, is purely across above the minus 30 level, below or above in the 60 level on the weekly or the monthly. It doesn't matter. There's no two levels there. It's just that if it crosses up or down, it's got basically wide swings in price, and the moving averages cross over each other. And you see what happens, okay? So yeah, those ones. Okay, so I hope you enjoyed this video. If you did, you want to smash the like, comment your thoughts below, subscribe to stay updated. Check out links below, and I'll catch you in the next one. Cheers.